Let's welcome in our next guest, R. Sreesankar, Head Institutional Equities at Prabhudas Lilladher. Sri, I just wanted to ask about how do you value a company like MINDTREE? In Q4, they issued a profit warning. Then the numbers were great. Q1 numbers were good. Today, we again had a profit warning coming from them for Q2. We were looking at markets paying these companies a decent multiple because of predictability. But that is now going away. So will the multiples derate?
Definitely, and I think you always see for companies where the management, whenever we come and say that management bandwidth is good, management has got a visibility in earnings, my key takeaway is that you will consistently see a lot of these companies earning a superior ROE, and they will have much more consistency in earnings, visibility will be more clear. That's when investors tend to give a premium valuation to such kind of companies, which has got all these parameters. So if you start having your results all over the place, or if you start seeing consistently missing your guidance that you give, even in the previous quarter, the current quarter, if in the previous quarter, if you go and give, or for that matter, in the current quarter, you're giving a guidance of how you will be doing in the following quarter, and you miss that, and consistently these kind of things keep happening around, then I think in general, what I have observed is investors lose patience with such kind of stock, and the consequence of it is going to be a derating of the stock, where they will probably start quoting at a discount to other peers in the industry, and that's a natural flow of valuation for companies from the investors.
Is that the case with something like a Jubilant Foodworks as well?
I think in Jubilant Foodworks, our take is it's structurally a different story, where we are actually seeing in a competitive product, probably you're seeing more of a increased competition, especially in, you talk about burger. So you have also seen a burger pizza getting launched by Jubilant. The same store sales growth has dropped, and you have actually seen probably the new launch of their Dunkin' Donuts continuing to bleed. Then also more competition from a lot more of the apps, that is, so the bundling of more and more of new eat outs or whatever takeaways and everything continue to increase, whether it is in Italian foods, sandwiches, or even the Chinese food, etc. The category itself as a quick style restaurant, quick service restaurant, you're seeing a lot of those changes. Then in the burger side, you already have all the big majors in the country right now. So you also see, if you look at it, your rental cost increasing. So I think there are n number of reasons for probably in Jubilant Food, and we as a house has got to reduce on the stock. So I don't think that it's comparable, a MINDTREE versus Jubilant. I think industry is different, reasonings are different. So it's a completely different ball game altogether.
As far as Yes Bank and Axis Bank are concerned, they have hit further highs today, or they are the top gainers on the Nifty pack. What's the call with private sector banking names, especially these two? Are valuations now looking?
We continue.
Right, go ahead, Sri.
We continue to like the private sector banks, and but I mean the valuations of these banks are run ahead of what we have assigned as a target price for these banks. So we need to revisit their thoughts, and we continue to believe they're relatively at a much better wicket. But now it's very difficult to pinpoint one factor, but at the same time we tend to believe that the inflow from FIIs continues to remain robust, and when you continue to have a strong inflow, and in the lack of with the lack of any kind of a selling, you tend to see these prices move much higher. So if you look at as a house, we have had a target market trading range of 7,800 at the bottom, at 8,500 at the top. More or less, it should be at around 8,500. We expected the market to trade from a strategy perspective because of the inflows, that strong inflows. You see the market moving above that range to around 8,900 right now. So if you don't see any kind of selling happening, or for that matter, any rate changes in the US, etc., and Fed rate changes, etc., or if liquidity doesn't dry up, then markets will continue to remain at elevated levels. And consequently, all these stock prices of the leading banks, etc., will also move from our target prices. And that's the big risk that we are running in terms of a recommendation.
Cost of funding coming down or yields coming down is one of the biggest reason for the recent rally?
See, Pankaj, again, cost of funding coming down is actually showing you the kind of liquidity that is there in the market. So you have, I think the new 10 years were issued at 697. That's a coupon of 695 or 697, etc. But if you look at the 10-year bond yields, it is somewhere around 710. So you have the liquidity from OMOs of RBI continuing to result in yields moving down, plummeting over the last 2 months. And that has actually added up to the good liquidity situation. Obviously, the banks with a high CD ratio will tend to benefit, and these private sector banks tend to have a higher CD ratios, and obviously they are one of the biggest beneficiaries as well.
Good morning, Mr. Sreesankar. This is Anandya from the Delhi studio. How important are the new norms that have been announced in the construction space, especially the announcement that 75% of any arbitrage, anything that has been won will be given to the construction companies?
See, I would love to know this entire fact from how that 75% of the arbitration award, if to be given to the construction companies, in terms of how this will be given to them, whether if you are to give a bank guarantee, what's the kind of a margin for these bank guarantees to be maintained? Will the bankers be willing to issue a guarantee to these kind of companies, because most of these companies are already in a financial strain and there is a liquidity issues with these things. What is the kind of margins that need to be maintained? And even if the bank guarantee is given, then that's a contingent liability. What this money will be used for, whether this money will be used by these construction companies to repay some of the old existing debt that it is going to be there, or are they going to use for working capital? If they are going to use it for working capital, then it's an incremental debt effectively which is coming onto their books, and will the bankers will be willing to lend to that extent as well? So there are so many answers to be got for these things before we come to a conclusion. But one thing is for sure, it is definitely going to give some breathing space for these companies.
Because we are seeing since the morning, a lot of them, Patel Engineering, Pankaj was speaking to the management, and we've seen SPML, and we saw Hindustan Construction, the way in which it went up on the same day itself. All of them have come and said that get this money, our debt level halves. But you're saying that you need to see the fine print to understand whether that really is going to play out, right?
See, we did speak to some, we need to ultimately come and actually see that the spirit of that entire ruling is good and it should ease out. But at the same time, we need to look from a banker's perspective. Somebody who's going to give that guarantee, who is going to issue that guarantee. Why will a banker issue a guarantee to any company which is leveraged? And probably which has got overdues which is outstanding without an incremental security. And if that money is going to come and repay some of this, repay the loans that they have, it is going to reduce the loans. I can understand. But if they're going to increase it for using it for some other kind of an issue, I'm sure that most of these companies in the construction segment that we mentioned about are either CDR cases, or many of them have got projects in NPA, especially the BOT projects.
Okay, I just want to pick your brains on the telecom space a little bit more. I know you've been speaking about it, but the entry of Reliance Jio. We were just speaking to India Ratings, and they felt that this completely disrupts and is going to be negative for the entire industry for some time to come. Is that something that you share?
First of all, we do not cover telecom as a sector in our house. Then,
right.
if you ask me for my individual view,
Yes.
I can clearly say that yes, if you have a new player coming in, and that's going to be price disruptive, he is going to try to get in market share. So you are obviously going to find the going tough for some of the existing players.
All right. So,
Especially from somebody who has got the ability to write a check of this kind of a size. And that's going to be the key.
yeah. But you do, I'm assuming you do cover Reliance Industries, right?
We do.
And
Yeah.
How do you price that in? Because, you know, everyone was waiting for the Reliance Jio launch, the new area where Reliance is going to get into. There are two ways to look at it, that the initial earnings seems to be something that you will have to look at again, and it appears to be depressed. But the strategy seems to be extremely long-term. The way in which Mukesh Ambani was talking about the IP world, where traffic lights will have their own IP. They seem to be thinking way beyond what at least we've heard from existing telecom players.
And I think that's going to be the way. And I think nobody is going to look at Reliance Jio investments Reliance has made in Reliance Jio and saying that it's going to be value equity from day one. From our own assessment, it's going to be there is a negative value to that Reliance Jio investment if you look for the next 12 months. So it's not to be looked from the next 12 months. It has to be looked from a longer term view. Now, we need to figure it out how this entire scenario turns out. Probably 12 months down the line, 15 months down, 18 months down the line, etc. So, what it all depends upon: A, the number of customer acquisition; B, the stickiness of that customer to you even after all this promotional schemes are over. This needs to be well thought out and worked around, etc. So I don't think it's been launched a couple of days back, and today you have a straight answer to it.
So there'll be many more days, I'm assuming, in the near future, over the next 12 months, to buy a Reliance stock at probably better value, right?
That we need to figure it out how much time it is going to. I don't think that any one of the telecom players is going to sit back and relax, saying that okay, Reliance Jio is coming and probably this is what is going to do. Let's watch the fun. I don't think that's going to be the situation. They are going to counter. So you need to you need to figure it out how it will settle. But my own thought process is, what will happen? Probably I am a customer who has been having a phone for 16 years, so I have not bothered to change that number or go into another any other different scheme. So you have a lot of postpaid customers probably not shifting. This is my own thought process. Right. You'll not find them shifting quite a lot. But when it is so attractive, they probably will go and have an additional connection. Let's see how this turns out to be, kind of scenario. So you're bound to see some disruption definitely coming into the space.
Right. All right, Sreesankar. Thank you so much for joining us. Pleasure talking to you.
Pleasure.